Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, June 8th, 2011 is sponsored by Realtic. Alright guys, let's get right into the mix here and get things started. First off, a in spirit of bearish flag pattern just played out to the downside and taking us to a double bottom level intraday. You can clearly see this. It started yesterday at around 2:30 p.m. with a sell-off that took us into about 10 o'clock this morning. This is again the SPY, which mirrors the S&P 500 on a 10-minute time frame. So each candle is 10 minutes, and again, this is a look at the S&P intraday action. The market's again selling off from 2:30 yesterday all the way into 10 o'clock today. That was your downward move. Your sideways consolidation here clearly shows us an in spirit of pattern. Look at the choppy sideways action. That tells us that you're going to break lower. The first target was just tagged, which was a double bottom right there. And again, if you know the pattern, you can play this. There's another in spirit of pattern that I played earlier today and called out in the intraday stock chat. We made some very, very good money this morning on that play. Let me go over it right now. On an intraday basis, what we saw was a double bottom, or at least a hit of a trend line right here at the 128.50 level. You got a bounce. See this nice green candle? Look at the consolidation off of it. 1, 2, 3 bar consolidation. So you have an up move there. 1, 2, 3 bar consolidation. It also happens to be some key webinar count systems that we've developed as proprietary techniques. And by the way, the webinar this weekend is at 1 p.m. Eastern Time on Saturday. That's the Methodology in the Money Stocks webinar, where we will teach you our proprietary techniques, cycle counts, count systems, you name it, everything that we've used to call the pivot highs, pivot lows in this market, and know exactly when the market's going to turn will be revealed in that webinar. So I encourage you to go to InTheMoneyStocks.com and take that and sign up for that webinar this weekend, Saturday, 1 p.m. Eastern Time. In any case, the buy alert today went out on the intraday stock chat at approximately 128.75 to 80, and within about 10 to 15 minutes, the market was all the way above 129 for a little bit of a gain. I would say about 20 to 30, possibly even 40 cents for some people, as we hit the target ultimately here at the 20 moving average up here at approximately 129.20. That's about a 40-cent gain across the board on that long play. Beautiful trade right there. People in the chat room cleaned up. We had a nice long position that we bought into that based off the methodology of the webinar and obviously the in spirit of bull flag pattern, and it paid off handsomely. The markets since then have just gyrated sideways. Ultimately, the longer-term bear flag just played out to first target. Second target is actually a move all the way down to 127.75. So there may be a little bit more downside. We're seeing the market trying to break this level. If you get below this level on a closing basis and confirm it, you should go to 127.75, possibly even by the end of today. So again, markets are looking a little bit weaker now. We were trading along the flat line all day. Now we have seen the Dow Jones Industrial Average go negative. It's now down 20 points. NASDAQ is getting hammered here, down 28 points, and the S&P 500 is down 5 points. NASDAQ's down over 1%, while the Dow and S&P are just fractionally negative. The reason why the NASDAQ is down so much, take a look at stocks like Amazon, Baidu, Google, Apple. Intel's getting hammered today. Dell's getting hammered. Cisco's down again. Microsoft's down. I mean, they're tech stocks. It's really no tech stocks that I'm looking at on my watch list right now are trading to the upside. They're all pretty much trading to the downside, so keep that in mind. Okay, a couple other things to go over here as we continue to fall in this market. Let's go to another reason. Now, this is going to be a small reason why the market is not as ugly as it may seem, and why I actually expect a bounce probably starting as early as tomorrow in this market. All right, and the answer to that is simple. Markets are slightly lower today. We are seeing the spiders down about 55 cents, but the reason why the markets are down today and trying to, or at least losing ground in the short run, is because the dollar is pushing up today. So the dollar is up, and the dollar is up pretty sizably today, and the markets are only fractionally lower. I mean, aside from the NASDAQ, the S&P, and the Dow are not down that much. So, again, that could be made out as a slightly bullish case. The other issue with the bullish case that you could point out is the fact that this is options expiration week we're coming into next week. And generally, with so many people bearish in the market, the contrarian view has to be that the institutions will try to bounce this market probably starting as early as tomorrow or Friday and then into early next week, because the institutions are the one that sell the puts to the average investor. The retail investor buys the puts. They're generally the buyers of options. Other players do it for protection as well, but generally, you have a lot of individuals buying the option trades. And with so much bearishness out there, there's an overloading of puts. And the institutions are going to lose on those puts if the market continues to sell off, and they'll actually take a loss on this options expiration. The key is generally the institutions will manipulate the market and try to bounce it. If we've sold sharply over the last few weeks with a lot of puts out there, they'll try to bounce this market back up and try to regain some of those losses and actually turn it into more of a profitable type options expiration. So that's the case that I'm making right now, is why we may see, even though we could go down today a little bit more, it looks like, based on the current intraday chart, if we punch up the SPY again, I do think that there is a little bit of a bounce on the horizon in the market that we may be coming towards, all right? So we will keep a close eye on that and see and follow it very closely. Let's take a look at a couple other keys to this market right now. First of all, we'll go to the dollar. You can see again the dollar. This is the UUP, which tracks the dollar. It's an ETF that follows the dollar. We're just a little bit off the highs of the day as the markets are breaking down here in the early afternoon session. And again, what I want to do is go over a couple strong stocks out there. What's the leaders? What's keeping the Dow Jones Industrial Average at a minor loss of just 25 points right now? Because really, at this point, the Dow is down 20 points. That's barely a loss, right? So what's the reasoning behind it? Well, the answer to that is pretty simple. You have ExxonMobil having a very, very strong day, up 83 cents. Even though it is breaking down here, it's still up nicely on the day. And Chevron as well. Now, why are Chevron and Exxon doing so well today? The answer is simple. It's OPEC. OPEC, which is the oil-producing nations in the Middle East, and mostly in the Middle East anyways, they had a meeting, and for the first time ever, they could not reach a consensus. Countries like Saudi Arabia wanted to raise oil output. Other countries like Iran and Venezuela did not want to raise output, and they just basically fought and fought, and we saw a lot of these OPEC ministers storming out of the meeting. They were just upset the fact that it's never happened before, that they couldn't reach a consensus, and that obviously means no increase in output, so oil took a huge spike today. Take a look at the USO, folks, and it is coming in a little bit, but look at the still, it's having a huge day to the upside today, and that's with the dollar being higher. Usually when the dollar's higher, we see oil actually lower, but here, because of that OPEC meeting and no raise in production, you're seeing the USO having a very, very big day to the upside. So again, that's oil being up is going to influence Chevron and Exxon. They're going to be positive, and those two stocks are helping the Dow Jones Industrial Average. Another stock, which is one of the rare technology stocks to be up today, that's helping slightly, is IBM. With the market down here, especially with tech stocks down, IBM's having a good showing today, down just 39 cents on the day. So, up 39 cents on the day. So a positive move there is helping the Dow Jones Industrial Average. And Chevron, Exxon, and IBM are all huge components of the Dow Jones Industrial Average. Also, JP Morgan's a big component. And of the financials, as weak as they are today, JP Morgan's only down 13 cents. So, it's really not a big drop. You would almost consider that a flat. And I do think there's a scalping opportunity down here at the lows of the day on JP Morgan if it gets there. For those of you that are scalp traders, you can watch for that. All right. Other stocks that I think are kind of big movers today, MasterCard is getting hit decently, down about $7 on the day. That stock has had an unbelievable run higher. If you zoom out on this chart, look at this move from late in 2010, right in late December. The big move up here goes all the way to almost $300 and is now corrected back to 267. That is a pretty solid correction there. One thing I just want to break in here and just announce to everyone, do not forget to take that free trial of the Research Center. I put out a new trade alert intraday today. We'll see if it hits, and again, it's a swing trade. Everything in the Research Center is a swing trade. I never put day trades out there. So if you're a swing trader, if you're an investor, that's where you have to be. All right, we go over proprietary techniques. I do videos every night talking about trades and trade setups. I give out trade alerts via text message and email. All of those you can get as a free trial, no obligation. As long as you cancel that free trial before the end of your 7-day free trial, you will never be charged. And again, if you end up making as much money as our subscribers are making, you'll be there for life, basically, because it's that good. All right, so keep that in mind, folks. And again, you can take an intraday stock chat 7-day free trial too, and come in and actually listen to me talk live in the intraday stock chat. I call out trades. We talk market analysis. You type in questions. I answer and call out swing trades. I call out day trades. I do everything along with my partner in that intraday stock chat. And the same thing goes there. It's a free trial, so I encourage you to do that. Other stocks making moves today. I thought it was very interesting. For the second day in a row, we saw the financials really surging at the open. Take a look at this. Yesterday we saw Goldman up $2. It fades and closed negative. Today it opens lower, surges up $1.50, and is now basically on the flat line. It's getting a small bid here, which actually looks good, but still you're seeing this early morning surge in financials, and they just can't hold the gains. Jamie Dimon, if you guys heard that yesterday, I thought it was fascinating what happened yesterday. Ben Bernanke's given his speech, and now he gets into the Q&A portion, and he basically says, hey, listen, Jamie Dimon comes out and actually asks him a question, which is very unusual because it was essentially calling out the Fed chairman, and he said, listen, with all these new regulations on banks, don't you think that it could actually cause another recession? Because you're putting all these regulations on banks. The banks aren't willing to lend because of all these new regulations, so you're not getting the money to flow into the market like you would. You're not getting small businesses to get money and loans. You're not getting as many housing loans as people would want, and so forth. And do you think that it's maybe not wise to put all these new regulations, the Dodd-Frank bill, and all these other things on top of these financial companies? And essentially, you have Jamie Dimon calling out the Fed chairman and saying, "Hey, listen, be aware. We as banks, we will group together like OPEC, and if we want to cause another recession, we'll do it, and we're going to say it's because of this, and you'll be blamed, and the government will be blamed, and so forth." It was a very, very interesting little comment there and question raised, and you have to wonder if it's a little bit of a slap in the face to the Fed chairman at that time. And the one thing you can say is, you can't. Jamie Dimon is essentially seeing his stock price, and this is Goldman Sachs, so he's not with Goldman Sachs, he's with JPM. But look at the Goldman Sachs performance in 2011. It is ugly, folks, ugly. And then JP Morgan, not much better. It's a little better, but not much better. Look at the tank recently on that. And then Bank of America. These things have just been absolutely demolished. Bank of America is just so ugly down here. And Morgan Stanley, same thing. Look at Morgan Stanley. And again, it continues to kind of trade in the lower ranges of support down here. Now, I personally think the financials are going to get a bounce soon. I've said this for the last couple days. I'm going to stick by it. My thought process is all the bad. There's so much bad and negativity out there that I do think that the bank stocks will start to see a bounce. I don't think there's much more bad news in the pipeline for these. I think it's mostly factored in the short term. I think in the longer term, they're probably going to go lower. Short term, they're probably not going to go lower, and they'll probably get a little bit of a bounce. So I'm kind of eyeing a couple of these. If you're in the research center, there are a couple trades out there on these, and you want to join and take at least that free trial of the research center to get involved and get some of these trades, because they'll be good winners. I'm pretty confident at this point, as we continue to bat 90% on all trades given out in the research center, that we'll have some winners here on all stocks out there that we're posting. All right. Market again, let's take a look at the spiders. Spiders getting a nice little bounce here. If we go to the intraday, you close slightly below this line with a nice little tail. You're now bouncing up there, trying to hold this pivot low. I think everyone knows right now that the 1280 S&P level, which again my partner gave out yesterday, he said 1280 is the level today. And by the way, what was the low when the S&P hit this level here in the morning? What level was that? That was exactly 1280. So another great call right there, and that was used on the research center as a long play for some members. Emailed me and said, hey, listen, I bought at 1280 and I made a ton of money on a move up intraday. You're seeing it try to hold here. If it breaks, well, then you're going to go down decently, probably to that 127.75 level. But as long as they can hold this right around this level, you could see this market trade back up. So it's going to be an interesting afternoon, folks. Again, I encourage you to take that free trial to the Research Center Intraday Stock Chat, no obligation. And again, you'll probably make enough in the 1 week free trial to pay for multiple years at the Research Center. Take care, folks. Have a great afternoon, great evening, and I hope to see you soon.